Yeah, how's your mum? Hey, it is 6:36 on Wall Street, about 3 hours before the open of trading. It's time to get your global macro on. I guess I should open the website. The Quant-in-a-Box. All right. Welcome to QuantBox Live, where we uncover the best fundamental opportunities across the global markets. S&P 500, FTSE, DAX, gold, oil, dollar, pound, euro, yen, and 29 other assets. It's a lot. Yeah, and we have to compare and contrast all of those to each other, not just to the macro conditions or to the seasonal trends. My name is Wayne McDonald. Been doing this for 20 years. I have a degree in macroeconomics and a master's degree in financial management. And really, QuantBox is my automation of my macroeconomic research so I can make intelligent decisions for trading and investing. Okay, so for example, that's what the Commitment to Traders report looks like. Yeah, amazing. Look, if you're watching this on YouTube 6, 7, 8, 9, 10 hours late, why don't you swing by quantbox.co? It's $79 monthly for the retail subscription, but it's only $8 to try it. Check it out, play around with it, log into the database. It's all live data. Cool thing is, if you actually do the math, the professional subscription is significantly cheaper, and there's way more stuff. And you can see I've added more stuff here. There's stuff I've created over the last 6 months, like 6 or 7 more pluses over here. Upgrades that I've barely even told people about. I just did it. So anyways, how do you say it in English? It's freaking awesome, and you need to try it. If you want to start trading like an institutional investor, you need to try QuantBox. You need to get QuantBox. Think of it this way. It's kind of like your Bloomberg terminal, except it's not $1,000 a month. Okay? Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's log into the QB Pro. Ah. All right, let's go through it. Yields are up a little bit from yesterday. This market isn't open yet, so that's why it's 0.0, but we know it was 0.8 or something. So it's up a little bit, but nothing to freak out about. I actually want that to go down because I want people to buy bonds. Here's the thing. Today's a big bond day. You might be thinking it's FOMC day. Yeah. But the Treasury today tells us how many bonds are going to dump on the market, particularly treasuries, right? It's a treasury. We're going to find out this morning, and I think just in a couple of hours from now, the Treasury is going to basically tell us, or not basically, they will tell us how many treasuries they plan to sell. And if it's a lot, those yields are going to go up more. Okay, so that's the big news today. This afternoon is FOMC. The market believes they got that time just tickety-boo. They don't believe the Fed's going to raise, and they'll pause and leave a rate hike open for next year, or the next meeting, I should say. And because of geopolitical risk and high yields doing some of their work for them. So, okay, cool. So it's that bond report that will be the big one today, not the FOMC. Oil down to 82. Love it. Okay. Love it. I want to buy oil and I want to buy it low, and that is nice. Okay. Because remember, my numbers were, what was it? 80 to 80 to 82, 80. It was like 81 to 83 or something. Anyways, we're in there. We can take a look if you want. S&P 500 just hanging around this 4200 area. It's waiting for the FOMC. It's waiting for this bond market. It's waiting for non-farm payrolls. Okay, 106 is holding on euro dollar. We rallied up to 106 and now it's held. Bitcoin's just farting around. Looking at the stock markets over the last couple of days, everybody's had a little bit of up. Okay, but what's next, huh? What's next? More up for the stock market? Well, let's see. Let's get some more data. Taking a look at the risk gauges. Oh, hey now. What happened there? And that one went out too. It's interesting that this wouldn't have done it. What are we missing? The yield. The yield is dead. I can't refresh from here. Try again. No, that's going to refresh the whole page. Yep. Let me just kick it and see if it works. See, it's trying to do the math, and if the piece of the math is missing, like if it can't pull in the yield data, then it just can't do it. Breaks. Let's see. Yeah, interesting. All right, so I will work with the development team today. Yay. Cool. All right, so then let's go to the scatter plot. Okay, Japanese stock market way up. I think that's what that is. It's so far up, I can't even see. Let's do, let's do commodities only. Gold kind of flat as expected. And oil, big move. Nice. Now, there was a drop before it bounced, but that's where we are now. Bitcoin. All right. Stock indices, NASI down, FTSE DAX flat, Dow up, S&P 500 up. So this is where you get sort of a split decision, right? People expecting a rally will think these are going to go up today. And those that are expecting a decline will expect these to fall today. So it could be one of these topsy-turvy days, huh? So that bond market news could move it, but we'll definitely FOMC. We need to wait. Mostly bullish, okay, but they have been bullish in the next couple of days. Oops. And let's do our majors. Okay, USD CAD way up there at 0.1. All right, so nothing's really moving that much. 0.2 is the biggest loser, 0. So nothing really going on. Looking at our cross pairs. See, lots of things down. Some of them expected, some of them not expected. So no real trend so far in the day. And we kind of have one of those mixed days, don't we? Okay, Bitcoin, you can see, stopped its massive move. Yeah, you can also see just we hit those. Remember when it comes to the Swiss franc, we were buyers of Swiss franc. They fell down to monthly targets. Okay, we knew that. We expected pullbacks. Well, these are big pullbacks. These are significant moves in the opposite direction from Swissy being very strong to the Swissy being very weak, but right off of key pivot areas. It's kind of interesting. I wouldn't have expected as much, but it is what it is. Yeah, I guess in hindsight, I think to myself, "Ooh, I should have counter traded everything." But I wasn't thinking that way in the moment. So, uh, yeah. So, anyways, wowzer. Okay, and so the big question, and by the way, these numbers are like when you look at the percentages, those are 7 day percentages. So the Nasdaq has come down like 3%. Um, cool. Over the last rolling 7 days. Okay. And we know it's been somewhat up, like the S&P 500 has been somewhat up the last couple of days. So it's still down over the last 7 days, but it's been up a day for 2 days. So be interesting if it rolls back over and continues down. Because the reason I want to look at this is the medium term trend is still down. It's still red. It's one of the most bearish assets that we have, and it's been up for a day and a half. And sometimes we don't see it because we're caught in the weeds of today. And you're like, it's bullish. Everything's bullish. You're like, yeah, okay. Well, it might go bearish again. Nazi's the big one. If you recall, about 6 weeks ago, I took money out of the Nasdaq, and about 3 weeks, 2 weeks ago, a week and a half, 2 weeks ago, I took some of that money and put it into selling the S&P 500. Yeah, so that matters to me because over the last day and a half, I don't like that, but generally, I'm okay. So I look at that, I'm like, oh well, yeah, that's why I'm doing it. And of course, uh, yesterday oil rallied 1.3%, but is still down more than that over the last 7 days. So that's good. This might be a nice little, maybe today is the day to buy oil. Okay. What this is showing, the red and blue here, are, I wonder if I can make this zoom in a little more. Okay, there we go. When you zoom in, what you see here is the price of oil over this time period. So going for this is basically the month of October, or it is the it is the month of October, and it's showing you the when you see blue bars, they're showing you that QuantBox was telling you oil is bullish, and the score shows you how bullish. So the score or the height. So very bullish with a score of 5. Here's a score of even 6. And then down as low as 1 or even a couple of zeros down here. So notice that we were at 92, and by the time we were back down to 82, QuantBox was 0, 0. And then slightly bullish, slightly bullish, slightly bullish, and then very, and then it's come back off. So, right, it's still modestly bullish here. And Okay. And remember, it gets that score through its own analysis of oil, including seasonality. It's all in there. So it's still slightly bullish. So I can allow this to keep falling and wait and then wait for maybe like for example, this was 5, then it was 2, then it was 1, and you might be waiting for just some, a higher signal. I don't know, that's not the right word. But anyway, so like we went from a 3 to a 2. Maybe I wait for it to turn into a 3 again, and then I can allow myself to buy, or I can allow it to drop to 2 from 2 to 1. And then if it goes from 1 to 2, then I'm like, aha, right? And look at these as maybe potential bottoms, right? Um, so when this dropped from 92 to 91 to 89, okay, then this score started to drop. And it wasn't until we were down here that maybe I think maybe I can buy in here again. Because, you wouldn't have known everything to the right. And so down at 82, 83, then it went to 85, then it went to 86 and a half. Okay. And then it dropped to 83, 83 and a half, 83 and a half, and still bullish, still bullish. And it went from 83 and we got all the way back to 90 from 82. And that's where we peaked. And then it dropped. That could be the maybe, and then, ooh. So here we are all the way back to 82. Okay. And the question is, do we buy it? It'd be cool. You would instantly know what the 200-day average price is. And you would say, well, maybe I want to buy it near $78.23. Wait, what? We know that information? Okay. We're below the 50 and above the 200. All right. Cool. Have you guys played with this tool? There's no video or anything. Yeah, I'll have to do one someday. Someday, when you're all alone and the world is cold. Hmm. You guys like the S&P. Okay. So this whole month of October, QuantBox has told you it's very bearish on the S&P. Even when it was rallying, it went from -8 to only -6. Well, remember, oil was barely ever +6, right? Still very, very bearish, and then bearish and cautious, and bearish and cautious, and bearish and cautious. And it's trying to turn positive, even though prices are down. Trying to turn positive, even though prices are down. Interesting. Well, part of this must be seasonality. Okay. So it's kind of interesting. We'll see how this continues, but QuantBox is kind of like got that in its mind, right? It went from extremely bearish to moderately bearish to now it's stuck in the zeros and the ones, even though price is collapsing. So will this eventually turn around? Well, I would really like that to happen, but I just don't know. Is it going to happen at 41? Or is it going to happen at 4,000? or is it going to happen at 3,800? These are all numbers that we've discussed in the past. I don't know yet. So we will have to watch. So if there's suddenly a higher high, higher low, I should probably remove my short position and at least remove my short position, right? At the very least. It doesn't mean I have to go long. I'm already exposed to the long side, but I should at least remove my hedge. Okay. Market price just below 42, 200-day average just above 42. We're below the 200-day. Okay. Yeah, that's low. Okay. But luckily, QuantBox has only pointed you down, except yesterday or the day before it thought about it. I guess that would have been Monday. It thought about it, and they're like, no, it thought about it. Well, look, it didn't fall for 3 days, right? So, anyways, you want to do some gold? Nah, we'll do that later. All right, so let's go to the charts. Let's maybe look at the S&P 500 and gold. And I just want to go back to here. Yeah, and this just isn't open yet. All right, so we're neutral there. Yeah, look at the Japanese stock market. Lovely, huh? And of course, a lot of that is the Bank of Japan meeting that we had the other day. They reaffirmed everything. So, boom, game on for the Nikkei. I mean, why don't we actually look at that for a second? Um, Lovely. All right, let's do that. And then let's change it up. Okay, so you want to find your lines. This is an hourly chart. Double check this one. 55. That's too far off. And it's just an EMA. We can add to this. We can go to insert indicators, custom, drag this down and go zero lag moving average 21. And I'll make it, well, I guess that's bright enough red to be contrast. And the way I'm using this is I'm trying to predict where the moving average will be in the future. So this is the actual moving average, and this is where I think it'll be in the future after we add several more hours of data. So in a way, it's saying like this becomes a buy zone. So this might be your trade plan for today. Excuse me. Okay, and that would be once again based on what the Bank of Japan told us the other day. It feels like a million years ago. I can't remember if it was last night. No, it was the night before. But anyways, excuse me. I got hiccups and I didn't smoke any cigars. No. So, anyways, interesting, huh? What else do we have? Not much of a trend. Okay. Okay, not much of a trend, but what I think we can agree to is not up. And I reviewed a lot of the data from yesterday, and not up makes a lot of sense. Not up makes a lot of sense. So, anyways, the way that you would obviously thread this needle is you would use your monthly swing trade strategy, and that would dictate something like this. Okay. And part of that is here's the combination of moving averages I just talked about on a different asset. The predictive 21 versus the actual 21 EMA. Okay. This is your sell zone. Now, if you don't believe in moving averages and you don't believe in pivot points, the only thing that is true to you, the only thing that's real to you is price action, then you would say that's your sell zone. Okay. So it's all the same thing. JP says, are we doing both the stock class and FOMC? I don't think I should. I don't think I should. I don't think I should. Yeah. So I will prioritize the FOMC and the press conference. Yeah. I'm one of these guys that pushes through and will do it, even if it's a disaster. And then, but I think I'm maturing. Right. I don't know. That's a bold statement. I think I might be maturing. So no, but we've been working very hard on the uh, on the presentation, and I'll get the latest edition. Uh, Probably I already have it. Um, it'll allow me to do a couple of things, add to it, or clean it up. It always could use a little polishing, and then start the next one. Um, so yeah. Mm. So I guess even if I don't present it, work gets done, and that makes me happy. That makes me happy. I hate treading water. I don't know about you guys, when in your life or your businesses or whatever, treading water, I feel like I'm drowning. Like even in the swimming pool, you're like, look at me, I'm treading water. And then I'm like, yeah, it feels like I'm gonna drown. Like it's just a matter of time. Whether I could tread water for 3 minutes or 3 hours, it doesn't matter. Eventually you drown. So, anyways, I don't like treading water. Yeah. So as long as work is getting done on the presentation, yeah, we can push off the actual presentation on next week. So all right. Mm-mm-mm. But it is cool because I'm going to show you how to predict a recession before everybody else even knows. I mean, that's nice, right? And so who knows, by the time I actually give you the presentation, I'll say, look, see, based on what I just showed you, we just entered a recession today. Yeah, but we're close. We're not quite there. Okay. Anyways. Okay. What else should we do today on this presentation? I guess just quickly, since we talked about gold and oil, we should talk about Just go over the data or the charts very quickly. And, look. We're not through here yet, but you might be able to argue, depending on how aggressive you are, that we got above that and we got above that. And now we're on the moving averages. And you know what? I might try this today where I have permission if I want to. Now, it's still very dangerous, really. I could try one of these today. Now, the smarter move would probably like allow it to come up to this future 55 and then buy it. Well, I might do both. I mean, I don't know. Like again, that would be almost like a hedge based on tensions in the Middle East. I mean, the media is getting into it. They're like, this is a horrible humanitarian situation. It's so bad here. But now we have war in the tunnels of terror. And they're like, they stir it all up. I'm like, tunnels of terror? They're terror tunnels, right? They're naming things and gamifying it. And like, this is the media, in my opinion. I'm like, these guys are pushing for it. Like, I wonder how much is the truth. Like, I don't know. It scares the bejesus out of me. So, anyways, the tunnels of terror. Wow. So who knows what's going on, but it feels like we're primed for something big, right? And if something big happens, oh, we'll sell lots of ads in newspapers. So I don't know. I don't know. So my hedge to all of that is I want to own something that might do very well in a scenario of very bad. What's holding us down, by the way, is two things. The idea of global recession. So today we might find the United States is nowhere near recession and the Fed's not worried about it. And maybe that ends up being good for this. I don't know. But really, the second part, and maybe even a bigger part, is specifically China collapsing. And I laughed yesterday doing my research because I went through all the UK data from multiple angles, different measures, UK PMI, UK jobs, UK inflation, UK, all kinds of UK, right? And it's like, everything is horrible. It's like, it's true. Some of the PMIs are like 41, and they're like, that's a 3-month high. 3-month high. Like, it's so bad. And then you read the official reports out of China, everything's good. Like, it's funny. They're like, everything's good and it's going to get better. And thank goodness for all the great policies, initiated by our government with their strong and forceful response to, and I'm like, what? Because, of course, we don't see any of that in the reality. But it's funny to read the report, right? And so I think there's a bit of a disconnect there. But maybe they do know something that we don't know. Maybe everything in China is horrible, but maybe it will get better very soon. Maybe the government will step in and do more to stimulate the entire economy and all that kind of stuff. And why do we care about that? Because what I'm talking about is if the entire world is going into recession, that's demand destruction, oil prices come down. Now, if one of the biggest consumers of oil, not just domestic oil, China has a lot of oil. But the thing is, they import oil too. All right. So, if one of the largest importers of oil suddenly comes back to the global market and wants to buy oil, and for some reason they can't get cheap Russian oil, okay, then maybe this comes up. Now, I have some doubts on that. I think as long as China can get cheap Russian oil, they'll get cheap Russian oil. They won't enter the global market, and you won't see Brent and WTI go up. They buy basically black market oil. So then, what's the realistic thing to make this go up? That the global recession is avoided and averted, and everything goes up? No, probably not. So then the next thing would be an absolute panic around supply. A cold winter in the northern hemisphere, uh, Europe in particular will run out of nat gas. That's total panic and chaos. Um, a hurricane hits the United States, shuts it down. Um, because of tensions in the Middle East, and America always wants to get involved. Sounds like a cool fight. Boom, let's get involved. Well, how would you fight if you were a small organization fighting the the superpower of the world? You attack them on their own land, right? A small group, one, two guys can do something bad. Boom. Okay. But Saudi Arabia gets pulled into this, and like all I can only think of like 7 or 8 or 9 different reasons why suddenly the world is in panic that there's not enough energy, and there isn't, by the way, and there's no backup. And so, yes, I would love for the global economy to return to growth and expansion. It's not going to be this year or next year for Europe. It's not going to be this year or next year for the UK. It might be this year or next year or the year after for the United States, but we're talking about the globe now. When does everyone else improve? Well, China uh, impacts Australia, New Zealand, and Canada because of the importing of commodities from those countries. So if China lags for a while, so when is China going to come back soon? I don't know. I don't think so. So anyway, so I don't see the demand side being the issue in particular for oil. I think it will return, but that's down the road. And I think even if it's 2 years from now, um, I don't think the United States can refill its strategic petroleum reserve that quickly. I don't think they're even actually doing it. I think they tell us they are, but I don't think it's really happening. I should probably get some solid numbers on that. So, anyways, going back to like, why would I buy oil in a time of global contraction? Um, because I look at it, and if there's a problem, we're screwed. Which problem? There's 7 or 8 or 9 or 10 or 12 or 20 or 200 problems that could do it. And what also scares me is I probably can't even think of the 800 others that might happen, but my childlike, simple mind doesn't even comprehend those risks. They're like the unknown unknowns. So for me, it's the supply side of the equation where I feel naked and afraid, and something bad will probably happen. Because why? Why would I feel that way? Because I'm naked and afraid. So I'm going to feel that way, even if it's not justified. It's how I feel. I feel vulnerable. Okay. And as a Canadian, I was born with boots on my feet. So being naked and afraid, I'm extra vulnerable, right? Yeah. So, anywho, uh, wow. So I am going to buy dips. I have to remind myself my rules of engagement. I can only buy double bottoms or higher lows. I can't buy a lower low. So if you see my lines already have drawn, my next line of defense is 78.25. And the nice thing is, if I still have it up, Oh, well, that's exactly the 200 EMA or 200 SMA. Sorry. Cool. Cool. Nice to know these things, huh? And if I can't see clearly because I'm naked and afraid and terrified. What was that? Right. Naked and afraid and terrified. I can always lean on QuantBox and say, help me be logical and intelligent, QuantBox. Help me stay focused. And it does. And that's just another tool that you might want to play around with. It's neato. Okay. So I'll let you go. That was a long one. I apologize for going too long. Peace on earth. May the pips be with you. May your profits be above average. I will see you shortly. And remember, keep your calendar open. I am going to schedule at investorbootcamp.com an all hands meeting for the Fed press conference. So what is that? 2. So we'll make it 1:45. The announcement comes out at 2. The presentation's at 2:30. And so that'll kill the stock trading course presentation, which normally is at noon. And then that will probably kill the day trading group at 4, uh, just because I'll be exhausted. So, so anyway, so reschedule everything, right? So play date at 2. Okay. And so I'll put that in the community section. Okay. I'll put that in the community section because swing traders and day traders are the only ones that can get into the swing trading group. Day traders can only get into the day trading group. And I want it to be all hands meeting, video only members. So I'll do it in the community section. I'll schedule a meetup and then you need to RSVP so you get the link. What do you stink? Smell like a plan? I'll do that right now. Peace on earth. May the pips be with you. May your profits be above average.